Joining us for a further look at what's playing itself out in that market scene is Odwa Magwentshu from Trive Investments. Odwa, always a pleasure. Good afternoon to you.
Good afternoon, Olthando.
Otto, I think you would have heard Zinati and I in our conversation earlier. We're just not seeing the December cheer that we thought. We're only at, 8 days in, so things could still change. But I'm just wondering, what are market, investors looking for to get to that Santa rally that we had seen actually in November?
November was quite a very good month in the markets, and it seems like it was an expectation or celebration rather of the no interest rate hikes that came out in November, and right now we're seeing, as you said, a muted response to that, or a negative movement in the markets, and I think mainly market participants are waiting for today's job numbers to be able to then see whether or not the anticipation for rate hikes to stop continue, or how that's going to affect the market. I mean, how it's going to play out as the markets go. But I think right now it's just maybe some profit taking happening. But yeah, we are seeing a opposite of what we were expecting.
I'm going to get your expectations for that non-farm payrolls number there. I've actually read very, different views, divergent views, with some saying, look, we are on track here, we should see that number cooling, but others saying that I could actually see an uptick. I'm keen to get your thoughts on what you anticipate.
I do feel that we should be expecting a cooling with regards to the job numbers today. We did see numbers, ADP numbers come out, and they were cooler. So I'm expecting that today's numbers will reflect that as well. It's also, we did see a lot more. I mean, the UEW strike also stop, which then, in my opinion, will lead to lower jobless numbers today.
I'm going to get some company news now. I want to start off speaking about ABSA, because for me, this is the one that I didn't anticipate the most. In fact, that share price is down quite a bit today, more than 6% right now. And ABSA has come out with an update. They have said that they are expecting, increases in revenue, so still benefiting from the endowment effect. But on the other side of the spectrum, Otwa, is the increase in impairments. I'm wondering if we are heading towards an inflection point here, where interest rates have just been high for too long, and going into 2024, depending on how long we have to wait for cuts, the consumer could be more and more strained.
Okay. Yes, I think that is the key takeaway from today's voluntary update from ABSA, is that the consumer is facing a lot of trouble and because of these high interest rates, and despite banks in particular making getting the best out of this. Right now, with that, we are seeing that the consumer is struggling, and we could possibly see more deferment, or people not being able to meet the credit responsibilities. So that being said, I think that that's why the share price is also down quite a bit. I think that investors are seeing that this high interest rate environment we are in is hurting the consumer, and that could be dangerous for banking in general.
Also keen to get your thoughts on Anglos now. They've given us quite a bit of an update. What's interesting here is that we have Anglos at group level down in the red, but Amplats as in the green. And so the story here is a cost cutting. And of course, this makes complete sense, considering where we are. But I'm keen to get your thoughts. Maybe we'll start off with Anglo American, with Duncan Wenblad coming out to say that, look, the prospects are good, but we need to cut costs drastically. Expected for the mining sector right now.
100%. It's mining sector hasn't been favored with commodities prices, especially your PGMs. And it makes sense why they are looking at, cost cutting. And with that in mind, I think it's the right move right now, and they have started, especially Anglo America has started doing very well in terms of cost cutting at the moment, and obviously we're just waiting to see if the platinum price or the commodities prices change in their favor going forward. So I think it's a very smart move on their front.
What is also, I think, for me, starting out with Kumba. Of course, Kumba is part of the group, also decreasing costs, but they've intentionally had to curb production due to stockpiles as a result of challenges at Transnet, and that also then is increasing their costs. I guess that is the impact of having structural issues here in South Africa.
100%. It's really damaging our economy, especially as you said for the likes of Kumba Iron Ore. I think that with them in particular, right now they are facing those issues with Transnet, and they are trying to work together with stakeholders that can assist. And it makes sense for them to cut their production at the moment.
And then I must ask you, Otto, I probably should have started with an oil. This is a very interesting one we're seeing with oil here. Brent trading at just over $75 a barrel. It's good for us here in South Africa, but I'm wondering what it signals about the global environment demand specifically, because we know, of course, that OPEC countries will respond from a supply perspective. Is this actually preempting a bit of a downturn in 2024?
I think, especially with oil, the OPEC people or community in the OPEC, they did state that they are looking to reduce production, and with the oil price dropping this much in the short period of time it has, I do believe that they could actually end up reducing production even further, just to be able to get the oil price higher. It is most definitely good for us here in the market, or in South Africa rather. However, with this low prices, these are prices last seen in around June this year. So I think that OPEC is going to try and reduce even further the production in order to try and boost the oil price higher.
We'll be watching that one very closely, Otto. I'm keen to get your stock pick, but first I'd like us to reflect on counters that have found favor with your industry peers.
So Zeda, they paid down their debt very nicely from the unbundling, so they're largely debt-free. There's been pressure on the share price. This happens with an unbundle. A lot of people get this company, Zeda, they don't know what it is, they don't want it, they sell it because it was never part of their portfolio. And we've seen that pressure flushing out through the year. Car hire is doing fairly well. Tourists are flocking with the weak currency. Election next year could help with a bit, and business, by all accounts, businesses are zooming less and flying and hiring more often. They talk about mobility as a service, which is sort of Uber meets Mr. Delivery and the like, or Airbnb, and it's interesting. But I think they're in a good spot, and I think they've got a good-looking balance sheet, and they should make some good profits next year.
Market momentum in the very short term, for the next week, 2 weeks is down. So I expect my stock pick Advotech to maybe partake in the downwards momentum, but closed about a week ago, and the reasons remain the same. Consistent income growth, debt is going down, and I think the African operations are going to do well in the future, and the prices at an all-time high and heading higher.
For boring old British American Tobacco, I mean, when I say boring, they came out with a poor trading update yesterday. Shares dropped to 9 or 10%, and on that sort of basis, it's on a PE of 6 or 7 times, dividend yield of about 10%, and dividend yield of 10% when you're only paying a 20% tax rather than full income tax on interest is starting to look quite attractive. And lastly, British American Tobacco hasn't kept track with Philip Morris and Altria in the US, so it's lagged its international peers and looking attractive at these levels.
Well, Otto, keen to get your thoughts on some of those counters, Zeda, Advotech, as well as British American Tobacco.
Okay. When it comes to Zeda, I think it is an interesting pick. I do like the business itself. I think that it does have potential, and Advotech is one of my favorite stocks as well. The business is quite well and expanding very nicely, and especially with the addition of a new leader at the helm, I think that's going to help the business. British American Tobacco, I think is still a very good defensive stock. They did come out with some details, I think, last week, and I think that's also a nice stock to look into or look at.
And which stock are you looking at this afternoon, Odwa?
I have to say it's Kumba Iron Ore on my side. I think more so with regards to the iron ore prices starting to climb nicely, and also the business is working very hard to cut their costs, and I think that that's going to work in its favor in the long term.
Odwa, a pleasure wrapping the week up with you. Thank you so much for your time. That was your midday markets update with Odwa Magwentshu from Trive Investments South Africa.